There is an epidemic. Scams have been plaguing the elderly population across the world, and the United States is no exception. Many of us know someone who has fallen victim to a scam, such as the grandparent scam, or an IRS impersonator threatening arrest if the victim does not pay up immediately. But this isn't about scams. At issue here is something more sinister. This is about advertising. There are certain practices that permeate through a large portion of advertisings targeted at senior citizens. These practices may not be illegal yet, hopefully someday more regulations come into play, but they're certainly morally dubious. So seniors are the victims, not of scams, but of advertising. Here's what we cover. Why is this problem so big in particular for seniors? What are these unethical practices in these advertisements? What types of commercials have these issues? So what type of services are they advertising? What type of products? What is being done? What's the government doing? Finally, where are we now and what is left to be done? How can we protect these seniors? Turns out, seniors actually watch more television than any other age bracket. Perhaps younger audiences have simply moved on to other forms of media, such as streaming or short-form content on TikTok or Reels. But seniors are there, watching television and being bombarded with advertising. In fact, over 77% of Americans aged 63 to 75 spend more than 2 hours every day in front of the television set, getting hit with the same commercials over and over. Tune into MeTV for an illustrative example. Their average viewer is 58, so half of their viewers are older than this. In between reruns of The Brady Bunch and The Love Boat, what will you see? Repeated advertisements for life insurance, reverse mortgages, and Medicare Advantage plans. Advertising itself is not necessarily immoral. All it does is create a desire in the viewer to buy the product or service. Here's a thing you might like. Give us money and we'll give you the thing is a basic premise that lives in most advertising. And it's not necessarily immoral to sell things in a capitalist society. The problem lies in the tactics. So what do these commercials do so wrong that makes them so immoral? There could be rhetoric that manipulates emotions. Maybe there's incomplete information about the product or service. Celebrity endorsements are an issue of their own. And maybe there's an implicit, even if not outright, implication that the United States government endorses or is affiliated with that product, service, or company. We will turn to each of these issues and examine how the various types of commercials utilize these. We might see emotionally charged advertisements that pressure a viewer not through presenting a factual foundation that enables rational decision-making, but through emotional manipulation. Most advertising naturally contains at least some emotional appeal, and arguably emotional appeal is emotional manipulation, because creating a desire to make a purchase is literally playing off of emotions. You're missing out if you don't use this. This will make beautiful women fall in love with you. Arguably ways of enticing a prospective buyer by manipulating emotions. However, the emotional manipulation here is fundamentally more sinister, and this is especially present in advertisements for whole life insurance. So how do these commercials cross the line from merely making them want to buy the product through appealing to them and across the line to manipulation? The very nature of life insurance presents this opportunity. It's one of the few things you can buy that is not for you. Sure, there's the pseudo-investment aspect of life insurance that can benefit the purchasing policyholder by allowing them to borrow against the policy, but overall it's meant for someone else. Buy this for someone else because you love them. Being bombarded with these during every commercial break is a reminder of the viewer's mortality, and it's not being done in an enjoy life, seize the day kind of way. The message is funerals are expensive. Don't let your family down. Don't be a burden. Through tapping into this anxiety and guilt, these exploit the senior seeing the commercial. It's emotionally charged, and it impresses upon them that failure to buy it means that they lack love and that they lack responsibility towards their family. Advertisements should present a more factual basis. Incomplete information fails to do this. Things aren't right for everyone. Sometimes the product or service is not only useless, it's downright inappropriate for the individual. We see these tactics across all three types of advertisements that were mentioned. For life insurance specifically, Colonial Penn advertises their $9.95 plan. You can get life insurance for $9.95 a month. What they don't tell you is that this is just for one unit, and they really don't tell you how little coverage one unit is. The most one unit will buy you is if you are a 50-year-old woman when you sign up, and that is $2,000. Older men might only get a few $100s for $9.95 a month. While it's true your rates are locked in for life, someone who thinks they're going to have their funeral covered and have something left for the grandkids is substantially misled. Once the viewer calls in to buy the service, now the truth is revealed, and they're left with the same anxiety and guilt and the same pressure to buy more. For reverse mortgages, the scope of this discussion is explicitly for this type known as the home equity conversion mortgage, the most common type. This allows seniors 62 and over to borrow against the equity in their home. Instead of a traditional mortgage where the bank makes an upfront payment and then the borrower pays back through monthly payments, a reverse mortgage operates in reverse, hence the reverse. The lender makes monthly payments to the borrower, and then the borrower pays it back during some triggering event, usually when they die or move out of the house. So what's the good? Sure, there's some good. It could be a useful source of income for some seniors. The home is theirs to do with what they want, and it's up to them if that they want to use the equity in the home to have more money while they live instead of leaving the home for their kids and their grandkids. But there are problems. It's a loan just like any other. It has fees and interest rates. As time passes, this interest goes up and their equity goes down. This can severely limit their options in the future. The borrower might not even get to remain in the home for the rest of their life. There are multiple triggering events not addressed in the commercials where the lender can call for the loan to either be immediately repaid or forced to sell the house for them to recover their money. This is not disclosed, and the process is highly confusing. Some terms that can get the senior kicked out of the home include failing to occupy it for 12 months, even if they're in a nursing home receiving medical care. Even worse, let's say there's a married couple. We'll call them Bob and Nancy. Bob signs up for the reverse mortgage but doesn't put Nancy on the paperwork. Bob dies. Until recently, more on this later, Nancy will be forced out of her home, out of her marital home. These aren't right for everyone. Maybe it's right for some people, but more information must be present in these commercials so the viewer can make a factual determination about whether this is right for them. Medicare. Medicare is complicated. We've been over this. Regulations are so long that it is nearly double the length of the U.S. tax code, including the Treasury regulations. This is 135,000 pages. Judges have trouble understanding it. Professionals have trouble understanding it. What hope does the layperson have of understanding it? Advertisers absolutely must be careful not to confuse, but instead they exploit the confusion and the complicated nature of Medicare by selling Medicare Advantage plans. Medicare Advantage, or Medicare C, is administered by private companies. That's fine. They are explicitly authorized to do so. But the problem is they sometimes sport the Medicare name in their company name and in the advertisements. A reasonable person seeing the advertisement might think this is actually Medicare. And when they call in for Medicare Advantage, they're contacting Medicare. They're contacting the government for an explanation of the benefits that they could get. In reality, they're reaching an insurance agent with the private companies. Commercials focus on the benefits and do nothing to talk about any potential downsides. There's nothing about this isn't right for everyone. Consider your options carefully. Now, Medicare Advantage must cover, generally speaking, the same things as traditional Medicare, but the plans operate differently. Nearly all doctors accept traditional Medicare, but Medicare Advantage has networks. So the senior might be unable to see their doctor of choice. They might be unable to see the doctor they've been seeing for all these years. Pre-authorization can be required, and it can be hard to get back on traditional Medicare. When these things aren't disclosed, it creates an exploitive opportunity for these advertisers to prey upon the senior citizens who are interested in their services. Celebrity endorsements are problematic because they are trusted people who have been viewed as esteemed heroes for decades, and they've been tapped into as a way for these companies to appear credible and to appear more legitimate. Tom Selleck, even Alex Trebek, and Joe Namath, Joe Montana, countless other people recognizable by most of society, in particular seniors, have advertised for these services. People form lifelong trust in celebrities they admire, and seniors are no exception. Joe Namath said he himself used Medicare coverage helpline, and Tom Selleck said he wouldn't be advertising for reverse mortgages if he didn't truly believe in them. Exploiting this trust is immoral. Decision making about a product or service should be based on the merits and not exploiting someone's trust in a celebrity. So what's the government doing? Several states have filed lawsuits against various mortgage companies. Federal government has stepped in too. Maura Healey, then the Attorney General of Massachusetts, sued a broker, an employee, and insurance agent alleging unfair and deceptive practices. This was in 2015 because they failed to disclose material information and misrepresented the terms. They used this opportunity of a captive senior inquiring about a reverse mortgage to sell other products or services, financial instruments that were wholly unsuitable for them. Sometimes it was an annuity where they could not withdraw the money for a set period of time. Sometimes it was high-risk investments. These things are appropriate for a younger investor, but probably not for seniors who need a stable investment and money that they have access to. This eventually settled for the low price of $137,500. This doesn't change the way the advertisers do business and how they advertise the services. It just struck back at one of many bad actors exploiting seniors. The Consumer Finance Protection Bureau has also taken action. In 2016, it ordered 3 companies, including Tom Selleck's advertisement of choice, to cease deceptive advertising practices and to pay penalties. These penalties total less than $1 million. Is this doing enough? Apparently not, because they levied fine once more against American Advisors Group, that same company Tom Selleck advertises for. This time they sought $173,000 in redress and $1.1 million in penalties. They were successful, and a judge upheld and ordered these fines to be paid. The lawsuits are doing something, but there needs to be more action. What regulations are happening? Some states have mandated a mandatory cooling off period for reverse mortgages, where the senior has 3 days, perhaps 7 days, to back out and not be forced to go along with the loan. Housing and Urban Development now allows the non-borrowing spouse, remember Nancy and Bob from before? Well, now Nancy can remain in the home even if Bob dies when Nancy wasn't on the loan paperwork. It's something, but it's not changing the way the advertisements are being done. In 2023, the Centers for Medicare and Medicaid have finalized rules aiming to change the way the commercials run. Overly general advertisements are now prohibited. And now they can't use imagery such as the Medicare card in their advertisements. This should help dispel some of the notions that they are affiliated with the government. The plan name must be disclosed, and brokers must fully explain the coverage. In 2023, a new regulation about celebrity endorsers took effect. When the advertisement represents that the endorser themselves actually uses the service, that endorser must be a bona fide user of the service at the time the advertisement was created. Now, celebrities such as Joe Namath, attesting that he used the Medicare coverage helpline, he would be required to actually be a bona fide user. Government's also doing some outreach to inform prospective borrowers and prospective customers. For instance, the Federal Trade Commission's website has information warning seniors about the potential downsides of reverse mortgages. It informs prospective buyers that they must keep paying taxes, maintain the property, and other terms. It indicates this loan is not free money and must be repaid. This is something. All of these things are something. But it's not doing enough. We need more protections, more regulations. But I'm not a lawmaker. I don't know how to write these things. All I can do is look out for the seniors in my life, look out for the loved ones in my life, and to take up the mantle as a lawyer to protect someone who was the victim of deceptive advertising But that's only the case if there's laws and that these laws were broken. All lawmakers must protect seniors.